Hello and welcome to the status report overview of SKAGEN Global in January. In what was a difficult month for equity investors generally, the fund fell 5.1% in sterling terms, underperforming its benchmark by 1.5% on a relative basis. One new company was added to the portfolio and we increased our positions in 3 others. We reduced the size of our holding in one company and the fund now consists of 101 holdings. The cash position fell from 4.1% to 2.6%. Our portfolio remains very attractively valued in absolute terms and relative to both the benchmark and the fund's historic average. The fund's top 10 holdings, which together represent a third of the portfolio, trade on a weighted forward price earnings multiple of 7.6 times versus 14.5 times for the index, and we see upside of 39% based on our current target prices. Looking at the market's performance for January, and we can see that equity investors had a difficult start to 2014, as concerns over weaker than expected economic data, in particular from China, were amplified by the US Federal Reserve further unwinding its policy of monetary easing. Only Indonesia, Denmark and Italy ended the month in positive territory, and many countries, particularly those in emerging markets, suffered heavy losses. Now let's take a look at the month's contributors and detractors. Starting on the positive side, Teva Pharmaceutical, a 1.9% weighting, was the best contributor to absolute performance in January. Its share price increased 12%, boosted by news that generic competition for its Copaxone drug had suffered delays and the company's cost-cutting program was proceeding as planned. Renault, a 2.3% hold position, was the second best performer as it recovered its December losses. On the negative side, Samsung Electronics, a 7.4% weighting, was the biggest detractor. Its share price fell 6% as it announced Q4 results slightly below expectations, impacted by bonus payments and currency movements. Wimpelcom, a 1.5% position, was the second largest detractor, as it announced an increase in capital expenditure and a cut in its dividend. Now let's take a look at the companies we bought and sold during January. First, a new company entered the portfolio as we took the opportunity to invest in Raiffeisen Bank International as it raised 2.8 billion euros in new equity to redeem the non-voting participation capital it raised in 2009 after the financial crisis. Due to previously weak solvency, the bank has been a laggard in the equity markets, but we believe solvency targets will be met going forward, and the bank has an attractive valuation, with leading positions in several Central and Eastern European countries. The fund's position in AIG, the US insurer, was increased in January. The share price has fallen, but we still see significant upside from higher profitability driven by internal improvements in costs, pricing and product mix. Chung Kong's weighting in the portfolio was also increased in January. The share price has come down recently despite strong performance in Hutchinson Whampoa, leading to a historically high valuation discount. Finally, we participated in State Bank of India's capital increase to raise our stake in the bank. The valuation has come down to very attractive levels, with the share price currently trading below book value despite healthy profitability and an attractive structural outlook. On the sell side, we further trimmed our position in ENSCO. There are signs of some day rate softening for the mid-water drilling segment, and this could potentially spill over to the deep water segment as well. Although ENSCO's balance sheet remains strong, we believe it will be difficult to grow earnings as much as expected with day rates falling further. That's it for this month. Thank you for watching, and for more information please visit the SKAGEN Global section of the SKAGEN website.